Welcome to Edison's new series, Real Assets in an Uncertain World. We live in an era of increasing geopolitical instability, higher inflation, and tightening monetary policy. Can investing in real assets provide sustainable, less correlated returns? Industry leaders from sectors such as renewables, infrastructure, media, and technology are joining us to reveal their views and deliver actionable insights for a global audience. In this session, we're looking at Cordiant, which invests in global digital infrastructure. To tell us exactly what that is, I'm joined by Stephen Marshall, Chairman of Cordiant Digital Infrastructure. Hello, Stephen.
Hello, good morning.
So first up, what is digital infrastructure and what are the key drivers of growth?
Vivienne, digital infrastructure is very much the plumbing of the internet. It's a group of assets that actually connect our access into the internet. So it is mobile towers for the mobile operators to connect to your mobile handsets. It's fiber that connects to the mobile towers to backhaul that information, and it is the data centers that host a lot of the content that, of course, we like to access over the internet.
What are the key drivers of growth?
And the drivers of that growth are very much the change in social behaviors. So it's almost intuitive, I think, now that we're all taking more and more access to the internet. We're downloading more content. Our children are uploading content. So very much on the personal social side of it, we're seeing increasing demand for capacity. And then on the business and corporate side of it, of course, we're seeing more need for capacity across the internet. Very much like this particular session today, that we're recording this over the internet with a virtual meeting, etc. And a lot of this is happening now within corporates. People are working remotely from home. They're working remotely from their office environment, and of course that requires a lot more capacity.
And does your digital infrastructure also include sort of satellites that are going up, or is that not included?
I suppose you could actually include it within digital infrastructure, but that's not an area of expertise that Cordiant Digital Infrastructure focuses on.
Now, what makes digital infrastructure so attractive as an investment, as far as you're concerned?
Well, it's certainly a growing sector, as we've already discussed, but it's a sector where it displays some very attractive sort of long-term economic characteristics. So typically, you're working with blue chip clients, large broadcasters, the mobile operators, the providers of content of the internet, Facebook, Google, etc., that might want to hold content in a data center, for example. The large telecommunication companies like BT and the incumbents, etc. So blue chip customers, and that want to host, they want to deploy assets in these digital infrastructure assets classes. So they want to put, mobile operators want to put antennas on mobile towers. The various content providers want to access fiber optic networks. They may want to put content into data centers. And when they do that, they want to have surety of continuity of service. So they want to sign long-term contracts. Can be anything up to 10 years with sort of 4 or 5 year renewals for fiber contracts or for mobile telecom contracts. But also, as a result of that, of course, the provider of that infrastructure, if he's signing a long-term contract, he wants to be assured that his costs will be covered over time. So there are always inflation clauses in there that actually increase the cost of the service each year based on some sort of inflationary index. And what that actually drives, when you look at all of those together, is very, very long-term, sustainable, growing cash flows with blue chip customers. And of course, those characteristics, as I've already said, make it a very, very compelling asset class in which to invest in.
And what sort of returns are expected?
Well, with Cordiant Digital Infrastructure, we set out when we listed the vehicle on the London stock market in February of last year. We set out in our prospectus that we'd expect to be able to achieve a 9% internal rate of return or better, with made up of a cash dividend element, and then a growth in the net asset value over a period of time. And during the last 15 months, actually having started out with our initial perspective of saying we would pay a 1p dividend, once we made our first acquisition, which was a really super acquisition in the Czech Republic, which was very, very highly cash generative, we were able to commit to shareholders that dividend would increase to 3p a share. And then when we made a further follow-on acquisition, we've also increased our guidance now to 4p a share. So a mixture of dividend yield and, of course, growth in net asset value over a period of time.
That's really impressive. But how do you go about selecting investments for your portfolio? What are the criteria? You mentioned, for instance, your investment in the Czech Republic.
Well, very much we're looking for quality assets, ideally national champions or with some really strong competitive moat. When we looked at the Czech Republic, for example, and we acquired CRA, we saw a national champion there within the Czech Republic, a company that provides tall towers for the broadcasters, medium-sized towers for the mobile operators. You have 3,700 kilometers of fiber which connects the tower to data centers, and they have 6 edge data facilities and a national Internet of Things networks, and very much cover and provide that service across the national geography. So very much a national champion, and that's what we're looking for. We're looking for companies that are invested in this space, that have good management teams, have a good brand image, and also where we can actually feather in additional capital to expand their assets, the breadth of the asset base. So build more towers, run more fiber laterals, maybe expand the data center facilities, etc., and get good organic growth as a result of that. From those additional investments.
As we know only too well in the UK, we think we're well connected, but actually there are big pockets of the country that are still not connected. So there's still plenty of potential there, even in those countries that are well connected. But what are the major risks around the investments?
Well, I think the major risks around this asset class is really being a disciplined buyer, and I think those risks are certainly coming to the forefront now, as we're seeing a change in sort of the economic characteristics that industries are facing. Now more than ever in the sort of the last couple of decades, we're seeing growth in inflation. We're seeing central banks increase the interest rate in order to try to diffuse that inflationary spiral, and I think it's going to be very important when one's looking at the investment in assets that one takes that new economic environment into consideration. So being a very disciplined buyer, I think, is going to be important, and I think we'll see some distressed assets right over the next few years, as people have not really been disciplined, and they've been banking on pretty much very low cost debt and large amounts of it for these investments, and that's clearly not going to continue.
Very interesting. So where do you see the most attractive opportunities over the medium term?
Very much in the sort of the multi-asset classes that we've already been successful in. We will see opportunities, I think, in the tower industry. We'll see more opportunities in fiber, and we'll see the opportunities in particularly in the interconnect data centers, which replicate the asset that we acquired in Manhattan. as opposed to basic sort of power and space data centers. We're very much more interested in the interconnect space of the data center market.
Thank you. It's been really interesting to hear you. Stephen Marshall, Chairman of Cordiant Digital Infrastructure, thank you so much.
Thank you, Vivienne. Thanks very much indeed. Bye-bye.